In this series of slides, we'll examine the role of CPAs in business. We'll look at the sectors they work in. Then we'll look at the percentage of companies with 10 or more employees that hire at least one CPA full-time. Next, we'll examine the type of work that they do in public practice called lines of service, and how that differs as a function of firm size. And we'll look at the profitability of small firms. Finally, we'll try and make sense of the numbers. In this second slide, we'll look at the percentage of CPAs that work in public practice. This is important to understand, since we believe that our leadership would like us to think that we're quite prevalent in industry, and that small public accounting firms are less important. Perhaps our experience is unique. However, when taking PD courses from CPA Canada, we're generally given the impression that public practice only accounts for about 25% of our members. We don't believe that this is true. Depending on how you define public practice, about 46% of CPAs work in public practice nationally. In 2018, there were about 315,000 businesses with between 10 and 49 employees, and about 59,000 with 50 or more employees. We wanted to align the number of CPAs that worked in industry to determine the degree to which our members penetrated the ranks of industry. So, we looked at the absolute number of CPAs that didn't work in either government or public practice. The idea was to align the remainder with businesses, assuming that almost none would work full-time in companies with fewer than 10 employees. Except, of course, those working in public accounting businesses.
CPA Canada published a CPA benchmarking study in 2019 with results from 2018. The study provides a breakdown of firms by the number of practitioners or partners. About 98% of firms have fewer than 9 partners, and fully 78.5% have only 1 or 2 practitioners. We looked at a 2020 study by Business in Vancouver that listed the top 20 firms in BC along with the number of CPAs on staff. We then took the number of partners from the same study in 2010, since the statistics that statistic was not included in the 2020 results. We then assumed that the numbers for the top 20 firms would be similar for the rest of Canada. While not the most scientific approach, we believe we can get a feel for the difference in span of supervision between the large and the small firms. We then attempted to align our totals with numbers from the Canada Job Bank study to see if the results appeared reasonable. We wanted to make sure that the number of CPAs we calculated aligned reasonably with the numbers of CPAs in NOC Code 1111, which is financial accountants and auditors. They did, in fact, align quite closely. It's readily apparent from our analysis that those in the small firm cohort averaged less than 1 CPA staff member per partner, 0.6 in fact. By contrast, there were 8.44 CPA employees per partner in the top 20 firms.
In this slide, I took data provided by Statistics Canada, but I had to interpolate a little. I used BC Stats aggregations for the number of employees by firm. In particular, I used BC Stats' more detailed breakdowns of businesses with between 1 and 49 employees. Essentially, I distributed the larger number of categories developed in BC, assuming that the distribution between these categories should remain relatively constant across Canada.
Next, we go back to the WASP barcode study and try to align what businesses in that study reported to see if it makes sense in a Canadian context.
Now that we've determined how many CPAs worked in industry, we're able to align the number of CPAs with the number of businesses. If we assume that the distribution of full-time American CPAs by size of company is consistent, we can calculate the approximate number of CPAs working for our largest companies. Statistics Canada publishes data that breaks down revenue for the accounting, bookkeeping and payroll services industry. This data includes both NAICS 54212, Offices of Accountants, and NAICS 54215, Bookkeeping and Payroll Services. On this slide, we have reproduced the data provided for 2017 through 2020 for the accounting, bookkeeping and payroll services industry taken together. There are approximately 30,000 independent firms in Canada, with total revenue of $21.5 billion. The 10 largest firms accounted for 46% of the industry's operating revenue. However, it is pretty clear that the breakdown of revenue is quite different for the large firms. In fact, Statistics Canada includes this description in the overview. Management consulting services showed strong growth in 2020, primarily among the largest companies. In 2020, these services accounted for 17.3% of the industry's total sales, compared with 14.2% in 2019. Tax preparation and representation services generated the most sales, at 28.1% of all sales, a 0.3 percentage point increase. Auditing and other assurance services, the second largest source of sales, dropped from 27.6% of total sales in 2019 to 25.5% in 2020. Auditing has been falling consistently year over year since a high of 32.1% in 2014. Bookkeeping, financial statement compilation, and payroll services fell as well, down 2.6 percentage points to 23.2% of total sales in 2020. The smallest CPA firms primarily provide tax preparation services. In order to do that, they must also provide compilation services. While some small CPA firms may provide monthly bookkeeping services, we believe that most bookkeeping services are actually done as a part of a continuous tax preparation service. If we reclassify the compilation work performed by small CPA firms, about 74% of total bookkeeping and compilation services, the resulting importance of tax services increases to 45% of total revenue. Now we can see the relative importance of tax preparation services in our industry. Just 10 firms earned fully 46% of the accounting industry's revenue in 2020 according to Statistics Canada. That continues a long trend of consolidation in our industry. The Big 8 firms of the 1980s became the Big 4 in about 2002 when Arthur Andersen went down. The breakdown of revenue is significantly different between the large and the small firms. 78% of CPA firms, those with 1 or 2 practitioners, earned almost all of their revenue from tax and compilation work. By comparison, the largest firms earned about 84% of their fees from audit and consulting. It's almost as if the smaller firms work on Main Street, while the large firms work on Bay Street.
Finally, we look at data on profitability of unincorporated accounting firms. What struck us was that the most profitable had little or no wage or even subcontract costs. What struck us most, though, was that increasing revenue was less important than reducing labor costs. The upper middle quartile of firms had less revenue than firms in either of the bottom 2 quartiles. In spite of this, they were more profitable, presumably because of their lower wage costs. So now any increase in revenue goes straight to the bottom line. The data in the previous slide hints at another and potentially more profitable business model for the small CPA firm. The leverage model used extensively in larger firms is probably not workable in small firms. Should we instead consider a variant of the model used by companies like Uber? Also, it's becoming apparent that audit and assurance work may not be a good fit for small firms in an economic environment where assurance work is becoming less important generally. However, there may be opportunities to deliver fractional controllership to growing small businesses. Clearly, our profession has not been able to penetrate the so-called management side of accounting.